Hey everyone, welcome back to Corporate Decoder, the place where we break down complex financial reports. And today we're diving deep into MongoDB's latest quarterly filing. And let me tell you, it's a roller coaster of growth and some interesting challenges. Before we jump in, if you like getting these clear, no-nonsense breakdowns of what's really going on behind the numbers, make sure you hit that subscribe button and the notification bell. And hey, we've got a fantastic community Discord set up for more in-depth discussions, so join us there too. Link in the description. Alright, let's get straight to it. This report covers the period ending July 31, 2025, and it paints a picture of a company still expanding rapidly but facing some headwinds. First up, the balance sheet. This is like a snapshot of the company's financial health at a specific moment. As of July 31, 2025, MongoDB had a solid $647 million in cash and cash equivalents. That's up from about $490 million at the start of the year, which is good. They also have substantial short-term investments totaling nearly $1.7 billion. This means they have a lot of readily available money. Now, notice this jump in goodwill from $70 million to $190 million. Goodwill is what a company pays for an acquisition that's more than the value of the identifiable assets. This big increase points to a significant acquisition during the period, which we'll get to. On the other side, the total liabilities are around $600 million, which is actually down from the beginning of the year. That's a positive sign, showing they're managing their debts. And total stockholders' equity, which is essentially the owner's stake in the company, grew to about $2.9 billion. So financially, they seem to be in a stronger position, at least on paper. Now let's look at how they actually performed their income statement, or as they call it, the statement of operations. This shows their revenues and expenses over a period. Total revenue for the 3 months ending July 31, 2025 was $591 million. That's a solid increase of about 24% compared to the same period last year, which brought in $478 million last year. So growth is definitely happening. Most of this revenue, 97%, comes from subscriptions. This is good because subscription revenue is usually more predictable than one-off sales. But look at the cost of subscription revenue. It jumped by 31% for the quarter, outpacing revenue growth a bit. This means it's costing them more to deliver those subscriptions. For the 6 months, it also increased by 30%. This higher cost of revenue is why their gross profit, which is revenue minus the cost of revenue, only grew by 20% for the quarter, and 20% for the quarter, and 20% for the 6 months. Typically, you want costs to grow slower than revenue. Their overall gross margin dipped from 73% last year to 71% this year. Specifically, subscription gross margin went from 77% to 6%. This might seem small, but for a company of this size, even a 1% shift can mean tens of millions of dollars. They mention this is partly due to the growing share of revenue from MongoDB Atlas, their cloud database service, which has higher hosting costs. Let's talk about spending. Sales and marketing costs went up by 10% for the quarter, reaching $244 million. For the 6 months, it was up 5% to $65 million. This is a significant chunk of their expenses, which makes sense as they're trying to grow the customer base. Research and development, or R&D, also saw a big jump, up 22% for the quarter to $182 million, and up 19% for 6 months to $350 million. This shows they're investing heavily in improving their product and developing new features, which is crucial in the tech world. General and administrative expenses grew 17% for the quarter to $59 million and 3% for the 6 months to $114 million. This includes things like HR, finance, and legal costs. Putting it all together, their loss from operations actually narrowed. For the quarter, it was a loss of $65 million, an improvement from a $71 million loss last year. For the 6 months, the loss also improved from $170 million to $190 million. So while they're still losing money, they're losing it a bit slower. This resulted in a net loss of $47 million for the quarter, better than the $55 million loss last year. For the 6 months, the net loss was $85 million, an improvement from $135 million last year. Remember that jump in goodwill on the balance sheet? It's from acquiring Voyage AI Innovations Inc. in February for $161 million, $120 million in goodwill and 24 knowledge and developed technology, which they'll amortize over a short 2-year period. They also issued stock as part of the deal, which is a common way to pay for acquisitions. It's also worth noting that stock-based compensation is a major expense, totaling $140 million for the quarter and $273 million for the 6 months. That's a significant portion of their operating expenses, reflecting their reliance on stock awards to attract and retain talent. A key financial event this period relates to their convertible senior notes. Back in October, they called all outstanding 2026 notes for redemption. Most of these were converted into about 5.6 million shares of common stock. This deleveraged their balance sheet by removing over $1 billion in debt, which is generally a healthy move. Now let's switch gears and talk about the risks. MongoDB is honest about the challenges they face. They admit that a rough economy which has seen increased inflation and interest rates is directly impacting their business by slowing down customer spending and potentially extending their sales cycles. This means it's taking longer to close deals and get paid. They also point out they have a history of losses, and as costs go up, they aren't yet generating enough profit to cover it all. This is a persistent risk they're managing. A big piece of their business, over 70% of their revenue, comes from MongoDB Atlas, their cloud service. They acknowledge that if they can't keep up with customer demand for Atlas, or if customer usage slows down, it could really hurt their growth and make their future revenue harder to guess. They've already seen some of this slowdown in recent months. On the legal front, they're facing a putative class action lawsuit alleging material misstatements about their sales strategy and financial results. This is a serious concern, and they are vigorously defending themselves. Another shareholder derivative lawsuit has been filed as well. These types of lawsuits can be costly and distract management, regardless of the outcome. They also highlight significant risks from the global economic landscape, including geopolitical instability, which adds even more uncertainty to their business. Looking at how they manage their stock, they've been actively buying back their own shares. In July alone, they repurchased over 556,000 shares for about $220 million. They've authorized a total of $1 billion for these buybacks, which can boost shareholder value. Now for my take. MongoDB is clearly in a growth phase, expanding its revenue and customer base. Their shift towards MongoDB Atlas, their cloud offering, is a strategic win, and it's growing fast. However, the increasing costs, especially in cloud infrastructure and R&D, are eating into their profit margins. The fact that their costs are growing faster than revenue in some areas, like subscription cost of revenue, is something to watch closely. They're clearly investing for the future, but investors will want to see a path to profitability. The acquisition of Voyage AI is a big move, and it's crucial they integrate it successfully to realize the expected benefits, especially with that large chunk of goodwill. The legal challenges are also a significant risk that could impact their reputation and finances. Overall, MongoDB is a dynamic company in a growing market, but they're navigating some serious economic and operational challenges. That's our deep dive into MongoDB's latest financial report. What do you think about their growth strategy and the risks they're facing? Let us know your thoughts in the comments below. If you found this analysis helpful, give it a thumbs up and subscribe for more, and definitely check out our Discord community. The link is in the description to keep the conversation going. Thanks for tuning in, and we'll see you on the next Corporate Decoder.